So welcome to the video, and in this discussion I'll be talking about my Bitcoin playbook. Okay. So before I start my concepts, I just want to tell you that this is a purely educational video and none of this is any investment or financial advice. This is purely for education and these are all the mathematics and statistics which people use for trading. Okay. So first thing is, one second. So first thing is, why should you invest in Bitcoin? Okay. The main reason you have to invest in Bitcoin is to protect your portfolio using correlation diversion. One second. Can you one second? I'll just mute everyone else. Okay. So hmm. So the main reason you have to invest in Bitcoin is that you have to protect your portfolio. Okay. Using correlation diversification. For example, if you are going to invest everything in one stock, or if you are going to invest everything in one type of asset, in case if the market goes to in recession, I'll just mute others. Okay. Okay, I'm sorry, the background noise was coming. Now everything is muted. So basically, for example, if you are investing in gold right now, um, gold, any asset you buy, it has a risk in it. Okay. If you are buying gold, okay, if you are putting 100% of your money in gold, you have a high chance of losing 20% the next year. Okay. So what you have to do is you have to diversify your portfolio. What you have to do is each and every asset, like cryptocurrency, you have to assign 10 percentage. For bonds, you have to assign a particular percentage. For share market, you have to assign a particular percentage. For gold, you have to assign a particular percentage. And for real estate, you have to assign a particular percentage. You have to assign it in such a way that nothing have a correlation with each other. If you see this, for example, S&P and bond, if the value of the share market goes up, the value of the bond will go down. Okay. And if you see share market and gold, if the value of share market goes up, the value of gold is also going up right now. And similarly, that is the case of oil also. If the value of share market is going up, the value of oil is also going up. But what we have to do is we have to invest in assets such that they don't have a correlation with each other. If you see Bitcoin and share market, they have a very low correlation of 0.26. So in case the share market goes in recession, a part of your investment will remain safe in Bitcoin. Okay. So this is what I first wanted to tell. You have to diversify your asset. In no asset, you have to put more than 10 percentage. Even if it is Bitcoin or gold or real estate, whatever asset you are actually buying, you make sure that that doesn't have more than 10% weightage in your portfolio. Now, this one is called a modern portfolio theory. This theory was made before like 30 to 40 years, and this theory got a Nobel Prize award. Okay. This ratio is called a Sharpe ratio, and this is what all the mutual fund managers use for diversifying their asset. So what a Sharpe ratio is um, Rx minus Rf divided by the standard deviation of Rx. So what they are doing is you are calculating the return which you need. Okay, Rx is the return which you are expecting. RF is the risk-free return. Risk-free return means, for example, you are buying government RBI government bond. That is called risk-free returns. If you buy RBI government bond, you will be getting an average return of 6.09% every year without any risk. And this is standard deviation. Standard deviation means, for example, standard deviation means how much your share or how much your asset is varying every year. So now, first I'll see the Bitcoin volatility. So Bitcoin volatility for the past 60 days, it has been like 18.56% volatile. That means its price is drastically increasing and reducing. And if you see the annualized volatility, The annual volatility of Bitcoin is 45.77 percentage. So if you are calculating the Sharpe ratio for it, as I showed, the Sharpe ratio is the return which you expect minus the risk-free rate divided by the standard deviation. So if you for the risk you take, if you are going to invest in Bitcoin, you should get a minimum profit of 51.86 percentage. If you are not getting this much percentage of profit, you should not be investing in Bitcoin, because it is not really worth the risk which you are going to take. And one more thing, yesterday I calculated the uh, annualized volatility of share market. And because of COVID, the share market prices started fluctuating very rapidly. And about the annual volatility which I calculated was 32 percentage. So if you are doing a Sharpe ratio calculation for share market, if you are going to get 37 percentage of, if you are going to get a profit of 38 percentage of profit from share market, then only you must invest in share market as of now. If you are not going to get more than 38 percentage return from share market, then you should not be investing. Now all these numbers are very high, right? No one will be getting 38% from share market, but this is what Sharpe ratio is telling you. Because right now the market is a very risky place to be in. The share market is a very risky place to be in. Even the Bitcoin market is even more risky place to be in. But if you want to get a good returns, you have to be in them. Now, if you want to get a 10% returns every year, this is my strategy. Okay. So what the strategy is, 89 percentage you can put it in very safe funds, such as government bonds, which give you like average of 6 percentage interest. And also like you can put 6 percentage profit in a very high growth share, and 5 percentage of your portfolio in Bitcoin. So so if you want to minimize your risk and maximize the return, this is the strategy you have to follow. In Sharpe ratio, there is a concept called as efficient frontier. Efficient frontier means you are going to minimize the risk, and for the given risk, you have to maximize the reward which you get. Okay. So if you want to for a efficient to get a very good Sharpe ratio, this is the percentage which you have to follow. One second. Okay. So one second, just a second. Okay. Now, the thing is like, as I said, this is the best. Actually, according to the portfolio management theory, this is the best strategy which you can follow right now. But since like getting a 38 percentage from share market and 51 percentage is very difficult. If you are like, if you are of my age, if you are of 25, you can just try this strategy. 10 percentage in Bitcoin and 90 percentage in shares. Okay. And in shares, like if you are going to put 90 percentage in shares, what this is the strategy which I personally follow. This is the strategy which my portfolio I follow it. And I make sure that I only invest in shares which have a very less volatility. Okay, I'll just tell you in another course about how to choose shares, which is very less volatile and which is very safe investments. Okay. Now, where to buy Bitcoin? In India, basically there are two major exchanges to buy Bitcoin. One is this WazirX. Uh, another thing is ZepPay. And if you want to make a lot of profit from trading, WazirX is the best exchange to be in, because if you are trading using this WRX coin, which is a native cryptocurrency, you'll be paying only 0.1 percentage as brokerage. For example, if you are going to buy 100 rupees worth of Bitcoin, you will be only paying a brokerage of 0.1 percentage. So in case, even if your Bitcoin price increases by 20 percentage, you will be only paying 0.2 percentage for brokerage. But there are other exchanges where you will be paying like up to 1 percentage of brokerage. So from the research which I have personally made, I feel like WazirX is the best exchange to buy Bitcoin in India. And you can either pay using this WazirX coin, or you can pay using Indian rupee. And if you are going to pay using Indian rupee, you have to pay a 0.2 percentage. That means if you are going to buy and sell Bitcoin, totally you will be providing a overall brokerage of 0.4 if you are going to pay with rupees. So what I recommend is, before you are going to invest in Bitcoin, at least buy four Wazir X coin. One Wazir X coin cost around 8 rupees, and if you buy four, it will be around 32 rupees. So initially you buy the 32 rupees and you use these as trading fees. Okay. Next thing I will talk about, before you invest, there are something which I have to tell you. First thing is share market, cryptocurrency market, or real estate. Whatever you are going to invest in, it is manipulated. It is heavily manipulated. All this like share market, cryptocurrency, everything is a game for rich people. Okay, they play a game to make money out of retail investors. That is the game you play, and you have to accept the fact that it is a game. You have to accept the fact that the whole market is manipulated, and you have to play accordingly. Second thing is, don't fall for pump and dump schemes. Okay. Right now, if you take last 1 week, Dogecoin was being pumped. Cardano is being pumped right now. And XRP was also pumped by 50 percentage. If any cryptocurrency increase by 50 percentage, you better not buy it at all, because it it is just called as fear of lot of people just buy the Bitcoin or cryptocurrency after it has reached 50 percentage. And if you buy at that time, you will definitely lose all your money. So don't fall for pump and dump schemes. Next thing is, never buy anything which internet recommends. So lot of times you will see a lot of websites which tells that they will be giving a trading advice, which they will say they'll be giving you investment advice. But most of them is like this. Initially, for example, what I will do is, I will buy doggy coin before I know it is going to rise. I will buy it and I will tell to hundreds of people to buy it. So when hundreds of people buy it, I will just sell it at a good 20 percentage profit. And everyone who buy dog coin or whatever useless currencies after me, everyone will lose the money. Okay. So never buy anything which internet recommends, and always do your own research. Never buy any single asset like cryptocurrency or gold or whatever by listening to others. Whatever you want to buy, do a complete research on it. Prepare a mathematical model. Like most of us, we are all well educated, right? We have all studied mathematics for at least 20 years of our life. So we have to start making mathematical model for before we make any financial investment. Okay. Next thing is, your gut feeling has a 70 to 90% of being wrong. Never trust your gut feeling, because if you are going to go to share market trading or Bitcoin trading, there is a 76 percentage there is a very high probability that you are going to lose the money, and it varies from 70 to 90 percentage. Okay, so average of 70 to 90% traders will lose money in share market or cryptocurrency market, because the reason is, as I told, it is a heavily manipulated game. Next thing is, have a statistical model for any asset you are going to invest in. So we have to build a financial model. If you are going to invest in mutual fund, whatever you invest in, all the top portfolio managers will have their own financial model. So what you have to do is, you have to learn how they prepare financial model, and you have to create your own financial model before you start any investment. And if you really can't make any financial model out of yourself, the best way is to give your money to financial advisors. That is the best way. Okay, don't take a risk with your money. Next thing is, the best way which I personally love to trade is, buy when people are very scared, and you have to sell when people are greedy. Okay. So I'll just give you some example on how I made money this month. Okay. Last month, there was bird flu. Lot of people were really scared that bird flu is going to affect poultry, and lot of people started selling Venki stock a lot. And what happened was, even though Venki released an official statement that none of their hens or chickens is going to be anyway affected due to bird flu, still people started panic selling a lot, and people actually made it. For example, it was at 17,050. It was trading around 17,050, and they made it around 1,500. Sorry, from 1750. they made it to 1500. So if you are buying the share at 1500, you could have gotten 200 rupees profit for each share just after the bird flu is over. So what you have to do is you have to identify the areas where people are very scared. Okay. And you have to see for taking the risk right now, will you get an appropriate reward? That is what you have to see. Okay. If everyone are very greedy and if all the prices are going up and you invest in whatever, you are going to lose your money at the end of the day. That is how it is. What you have to do is share market, Bitcoin, whatever, when people will be very scared at a time. For example, like Bitcoin is going to be banned in India. Okay. So this news is going to make people drive away from Bitcoin. So the price will decrease drastically. So you have to use this opportunity to buy Bitcoin. Okay. This is the, you have to know how to use the fear to buy, and you have to know how to use the greed when to sell. And at a particular point, just like share market right now, people will become very greedy with Bitcoin. And that is when you have to smell the greed and you have to sell it. Then, just like, for example, if buying share market, the usual way they do is buy at rumor, sell at news. And that is what, if you are going to cryptocurrency news also, you have to buy in new rumors and sell in news. Then one more thing, which last thing, this is the most important thing which I want to tell is you have to have patience. Whatever asset you buy, gold, silver, or if you are going Bitcoin, any cryptocurrency, you need to have patience. Okay. Um, like the right opportunity might come within next 6 months, or even you have to wait for 1 year. But when the right opportunity come and invest, you can like pretty much easily make 10 to 20% profit without like with a very minimum risk. But for that you have to have patience. So patience is the ultimate thing. And just because you have money, you should not invest in anything. You have to wait when all the fundamentals are perfect, and when everything is very good, when the risk, when the reward is very good for the risk you take, that is when you have to invest in anything. Okay, so I will tell my strategies which I personally follow. This first thing for Bitcoin is called as stock to flow model. Okay, stock to flow model is Bitcoin. What happens is there is something called as Bitcoin halvening. That means right now the miners are paid 6.5 Bitcoin uh, for every transaction block they verify, and within next 4 years these Bitcoin miners will receive only 3.25. So around here, people used to earn a lot for mining Bitcoin. And as time goes on, the mining interest which people used to get, it started becoming very low. And this event is called as Bitcoin halvening. And whenever a Bitcoin halvening happens, the cryptocurrency, that is the price of Bitcoin, will rapidly increase. So what will happen is you have to understand the market cycle. Like whatever asset you take, gold, if you take share market, if you take real estate market, everything has a market cycle. And if you are going to invest in something, you have to understand the market cycle. Without knowing without understanding this concept, you cannot succeed in this market. So what happened was, in this there are in this market cycle there are two things. One is called as crypto boom. Okay, first thing is called as crypto boom. Second thing is called as altcoin season. Third thing is called as crypto winter. So crypto boom is when the Bitcoin starts booming. See, whenever the halving take place, okay, like last time at 2018 it has took place, and right now at 2020 it has taken place. Whenever the event, this halving event has taken place, the Bitcoin will rise by at least 100%. It will not follow a regular linear pattern which we have experienced in share market. This will follow something called as logarithmic pattern. Logarithmic pattern means it will follow something like log of a plus b. That is what it will be following. So what they are predicting is from this stock model, the price is currently at, for example, wait, I'll show this in live thing. Just a second. Stock to flow model. Okay, so this is a stock to flow model, and as you can see, This period is called as Bitcoin boom. So every time a halvening occurs, in the next 1 year of halvening, the price of Bitcoin will increase by this much. So in this halvening, what everyone are predicting is it will increase from 9,000 to a price of 79 to 80,000. Okay. Right now we are at 38,000. So according to this model, what it predicting is if you are buying Bitcoin now, within the next just if you are waiting for 3 to 4 months, you will be literally doubling your money. And this part in stock to flow model, this whole part is called as crypto winter. Crypto winter means, as I said, the Bitcoin in 4 years, only in 1 year the Bitcoin will boom. Okay. The rest 3 years, it will just keep decreasing. So that is what have happened. See, if you see the first time, it has increased to 800 rupees. Then what happened was, after that, it has become 440. Now again, it has increased to 14,000. Then it has become 5,000. Now again, what they are predicting is it will increase to 80,000, and then it will again start either decreasing or it will start consolidating here around here. So yeah, this Bitcoin investment, you basically have only maximum till August to invest in Bitcoin. After August, it is a high time that you don't even look at Bitcoin as an investment at all, because this, and the main reason which attracts everyone to buy this asset is this is very volatile. And volatility, if you are going to do technical analysis, volatility is the main thing you have to see. Like there are two type of investment. Okay, if you want to do very short term investment, you have to trade in volatility. You have to only trade in highly volatile markets. And if you want to go for long term, that is when you have to make sure the volatility is as less as possible. So this is first thing, the stock to flow model. Next thing is BTC, Bitcoin entry strategy. Okay. So what the concepts which I am saying is, if you are going to invest money in anything, okay, don't invest 100% at once. Okay. If you are going to invest like 1 lakh rupees, you have to divide it into 10 parts, 10,000, 10,000, 10,000, and you have to strategically buy it. And for example, if you are going to invest only 10,000 rupees, what I suggest is you convert it into four portions of 2,500 rupees each. Okay. And what the thing is, first, if you don't know how to invest at all, if you are brand new to investing, I suggest you to learn first. And the first strategy which you have to follow is called dollar cost averaging. That dollar cost averaging means it doesn't matter what the price of Bitcoin is. Every month at first of like first of February, at first of March, at first of April, you will be putting to this 2,500 rupees in Bitcoin. Okay. And in a bull market, this dollar cost averaging is one of the best methods you can follow. Okay, in any type of market, this dollar cost averaging is one of the best method you can follow. But if you are really willing to learn, what you have to do is you have to make this 10,000 rupees investment into four parts. And first part you have to trade as per um, as the rate of 463-day stock to flow model. If you see here, the rate of stock to flow model is 30,241. So the first investment which you put in Bitcoin should be this one, like that 30,241. This is one of a very major support level. And if you are investing in this level, you can get a good profit of at least 10% in a very short term in a bull market. Because in bull market there are a lot of support. Okay, in share market, if you see, there are something called as moving average. In a bull market, what it will do is the share will just keep reaching the moving average, and it will act, the moving average will act as a major support region. And if you go to the bear market, this moving average will be acting as a major resistance region. In this thing, in right now we are in a crypto boom. So what we have to do is we have to take this stock to flow model as a major support region, and we have to put our first investment there. And second or third portion, what you have to do is you have to strategically allocate your money. Either you can do dollar cost averaging, or you have to do pattern analysis. Pattern analysis means there is a lot of this Bitcoin, it will form various patterns. Like there is something called as wedge formation. There is something called as cup and handle formation. There are a lot of patterns which follow. Uh, and you have to understand, you have to learn all this pattern before investing in it. And fourth portion, what you have to do is you have to invest 75 percentage, and the last 75 you have to only invest in 200-day moving average. 200-day moving average will be the most important support for Bitcoin, just like any share market. Right? For example, right now, Nestle, if you take Nestle, Britannia, everyone are reaching major support levels at 200-day moving average. So even if Bitcoin reaches a 200-day moving average, it is a very good opportunity to buy it. And BTC exit strategy. So BTC exit strategy is what you have to do is same. First thing what you have to do is 50 percentage of the thing. First 25% you have to immediately sell when you get 10% gains. Okay. This is the strategy which I follow. And next 50 percentage, what you have to do is you have to, as I said, you have to see the patterns. Okay. You have to understand which are the major resistance region. Usually right now for Bitcoin, the all-time high of 42,000 US dollar is a major resistance region. So if you are getting a good profit, that is when you have to sell the 50 percentage of Bitcoin. And the rest 25%, you have to make, like, if even if you are selling Bitcoin, you should make sure that you don't sell 100 percentage of Bitcoin. If you are getting profit also, you should not take all your money at once. um, you should only take money at a strategically, like 25%, 25%, 25%. And in share market also, if you are going to put 1 lakh rupees in a share, okay, you should never take 1 lakh rupees out just because you got a profit. You have to strategically take out 5%, 10%. Slowly, you should be taking out as per the need. Next thing is you have to know the last 25 percentage. What you have to do is you have to only sell when the Bitcoin is in a bubble. Okay. And to know that if a Bitcoin is in a bubble, you have to follow four things. First thing is called logarithmic regression. Second thing is called PL multiple. Third thing is called NBT signal. And fourth thing is MVRV Z score. First thing is logarithmic regression. Okay. If you see the past data, what happening is it is reaching the highest logarithmic this threads are there, right? Logarithm threads. It is reaching the highest logarithmic thread. It is going boom. It is going to bear market. Again, it is going to boom. It is reaching this line. Then it is going to a bear market. Then it is again reaching this line. Then it is reaching bear market. So this follows Bitcoin actually follows a completely mathematical model of logarithmic regression. Okay. So with this logarithmic regression only, they are telling that it will be reaching a final price of 100,000 soon. And when it reaches a very high price here, then you should still not be dumb and you should not keep holding it. We should sell it as soon as it reaches a bubble. Okay. So the thing is, when it reaches the half of this logarithmic band, after this you have to start being very cautious, and like you should not invest any amount after it reaches this amount, this place. Okay, you can invest here, you can invest here, and in this last band you can invest a lot of money. But once it reaches the half, it is time to sell. Okay, and when it reaches the half, the highest price, then you have to sell all your Bitcoin, whatever you have, because what you have to do is instead of just listening to anyone, you have to start following statistical models, and this is one of very good model which you can follow. Next thing is fuel. The next thing is called MBRV Z score. Okay, MBRV Z score is market cap minus realized cap by standard deviation. So this is so what they are doing is there is a value 7.5 and zero point 0.2. Okay, when this MVRV Z score reaches 7.5, then it is a bubble. Okay, and when it reaches a 7.5 of MVRV Z score, it is best time to sell all your Bitcoins. Right now the MVRV Z score is at 5, and when it reaches 7.5, then you have to sell all your Bitcoins no matter what. Next thing is PL multiple is there. PL multiple means every day 900 Bitcoin is being mined by miners. Okay, what they do is they are only mining using a device called as ASIC, and they have to pay for electricity bill and all. So what they do is they keep selling the Bitcoin at a particular amount to again buy latest ASIC or to pay for electricity bill. So what they do is this is the fuel multiple which they follow. It is the daily coin issuance by moving average. When the fuel multiple is so high, the daily coin issuance will also be very high. Okay. So what happens is when it reaches PL multiple reaches a value of 4, then it is a very high place to sell all your bitcoins. And when it is zero point 0.5, then it is the best time to accumulate all your bitcoin. Next thing is Metcalfe law. Nowadays, like in 2020, everyone who became rags to riches, okay, like lot of people earned money in a share called as Neo. Lot of people earned money in a share called as Tesla. Okay, now even Tata Motors is ramping up, and the main reason everything is doing is by a concept called as Metcalfe law. And all the top companies in the world, Facebook, Amazon, Google, everything follow this thing called as Metcalfe law. Metcalfe law means the more the number of users, like the more the number of users of Facebook, the higher the value of Facebook will be. Okay, so right now, like because Tesla is so hyped up, and even Bitcoin is so hyped up, and people who have Bitcoin will always try to promote it, right? So when people who's holding Bitcoin tries to promote it, this Metcalfe law will activate, and like and this price movement will definitely follow this Metcalfe law. Next thing is called patterns. Okay, if you are going to invest in something, you have to understand these patterns. You have to do something called as technical analysis if you are going to invest in a very short term. There is a website called as Trading View. This is the website which I particularly use. What you can do is there is a tab called as ideas. Okay, and here what people do is people. Hello. Okay, so what you have to do is you have to look at all these websites. Okay, all these websites, they have provided a very good research report. Okay, they will give a very good research report on when to buy, when to sell, which are the major resistance and support regions. So if you are going to if you are planning to trade, and if you are really interested to learn something, instead of listening to anyone, what you have to do is you have to look at all these ideas. Okay, you have to look at all these, like for example, this all the support level, resistance level, all these people like great trading experts, they have a very good analysis document on it, and you have to read all these. If you can't do technical analysis, you have to read all this document and take your purchasing decisions based on it. Okay, then next thing is I suggest you to use two recommended. These are the channels which I recommend. First thing is called as Benjamin Cowen. This guy is a mathematician, and he uses all these mathematical formulas for buying and selling Bitcoin. And if you are really interested in how to use statistics to buy cryptocurrencies or any other financial asset, this is the first channel which you have to watch. And there are all these, like Billy Wu is there. He is another quant trader, and he has created a lot of terminologies. He has done a lot of on-chain analysis on Bitcoin. That is basically like fundamental analysis, and he has a lot of concepts which you can learn from. And finally, there is a share market brokerage called as Zerodha, and they have a website called as Varsity. In Varsity, there is lot of concepts you can learn about, like about volatility, about the Sharpe ratio, which I thought. So about all these concepts you can learn from this. So, and there are a lot of references also, like all the trading charts which I have shown you, I have used from these three channels only. And if you are interested, you can just use these. One second. So anyone, so that's it, guys. So this is the main thing about Bitcoin. You have to do a proper technical analysis. And there is one more method for evaluating Bitcoin, that is called as on-chain analysis, which I can teach you later. So do you have any question regarding this? Anyone has any questions? Yeah,
Oh,
anyone?
Sairam,
Yeah, tell me.
can you teach me that Metcalfe law and how to use even in share market regarding?
Yeah, very good question. I'll just show you. I'll just open something called as this trading view. First thing, I'll just show you what Metcalfe law is. Okay. The reason I just told Metcalfe law is because it is a very big concept to learn. It is not a very small concept. So one second for trade now. I'll just open my trading terminal. One second. Just a second, just give me a minute. Okay, so Metcalfe law, it has two things, okay. First thing is called as daily active address. And second thing is called as transactional value. And what you have to do is you have to see this daily active address. Like the more the number of people who has Bitcoin, the more people will talk about Bitcoin and the more its price will go up. For example, the main reason, like if you take other currencies like Dogecoin, the main reason it is going up is because there are a lot of people who is buying Dogecoin and a lot of people are talking about it. So you have to see this daily active address. Okay.